Partyville Zero has become a member. Ivan has become a member. Melanie Foster has become a member. Savage Faith Creations has become a member.
since 1991. Birds and people are living together in seemingly perfect harmony, until one day a young man catches fire. This is Phoenix.
You've been knocked down and got up again. In a corner, you're surrounded, no defenders. You've hid your fury and kept it in, but it's time now you ignite and turn to embers. Like a phoenix, you burst in a fire, burn a thirst and desire.
Showtime.
Transform right up in a flash. You spread
Let's get ready to make some money.
from the ashes. Phoenix, you burst in a fire, burn a thirst and desire. You transform right up in a flash. You spread your wings to rise from the ashes.
Smash the like channel, smash the like button, best channel in the world. 14 languages, 65 countries, let's go.
Get ready for verse 2, Electric Boogaloo.
You see the truth behind the veil, and you know that they're just looking for attention. You don't let the ruthlessness prevail. Oh, it's time now, light your
Stocks are pumping again.
Like a phoenix, you burst in a fire, burn a thirst and desire. You transform right up in a flash. You spread your wings to rise from the ashes. Phoenix, you burst in a fire, burn a thirst and desire. You transform right up in a flash. You spread your wings to rise from the ashes.
On the way to 40,000, 10% of the way there. 40,000 is my projection.
You show you're a phoenix.
Boom! 36,000 today.
Phoenix, you burst in a fire, burn a thirst and desire. You transform right up in a flash. You spread your wings to rise from the ashes. Phoenix, you burst in a fire, burn a thirst and desire. You transform right up in a flash. You spread your wings to rise from the ashes.
All-time high set once again. Good morning, good afternoon, good evening, and welcome to the best live channel in the world. I believe that because we have the best family in the world. We're one of the fastest growing channels in the world. We have the highest engagement rate of any channel in the world. 98% of our live viewers are members. There's not another channel in the world who even comes close. 98% of our live viewers are members. We'll be in and out of members only mode today to give all my members priority, my members a chance to ask questions, be heard. Everybody has a voice. Everybody can call in. Everybody will get their questions answered. Everybody is important. Everybody is the star of the show. I am simply the engine that moves it forward, but you are the stars of the show. This is your show. I'm here to serve you all. It's the greatest honor in the world. It's the greatest job in the world. I absolutely love it. And if you want to become a member, we will be in and out of members only mode. There are many live streams that non-members don't see. There are many streams that many videos that the members, non-members don't see. There is the link to becoming a member. Become a member. It's only a couple of bucks. It's not to make me money. It's not about that. It's to provide the best service, get rid of all the scammers and the bots and the trolls and the nonsense. We're here to build the best, most supportive family in the world. We want to raise millions of dollars for charity. I've already raised millions for charity through the Lions Club. This is my Jack Weech trophy I've received for raising money for disabled children, the Lions Camp and all the rest of it. This is it here. But I'm now trying to raise millions of bucks on my YouTube channel, and I know exactly how to do that in the most cost-effective way in the world. So we'll be talking about that later on. We're just moments away now from getting the rate cut decision, and then we've got the conference. I'm expecting 40,000 people, which will be the highest number of any channel in the world in relationship to the subscribers to the viewers. I think we'll have the highest percentage of viewers ratio to subscribers of any channel in the world. And I believe we're going to be a 100,000 subscriber channel within 12 months, if not less. All right, welcome everybody to the show. Lovely to have you here. Please do tap the like button if you like this kind of show and production, and please do click subscribe and ring the bell if you want to be notified. Okay, we will go over to comments in a few seconds. Invite everybody in. We've only got a few minutes to go. We have been going live since 3 o'clock this morning. There you go. We've just passed the magic number, the 4,000 now. That's 10% of my 40,000. We're on the way. So now it will start to pick up quickly. I'm hoping for 40,000, which will make me the highest number relationship to subscribers in the world. That's what I'm predicting. Let's see if I get even close to that. 4,000 is still pretty good. We've just translated the show into 14 different languages around the world to our 65 countries, and it's been going since 3 o'clock this morning. Now, later on, when this event finishes, when Jerome Powell finishes, we'll carry on for another hour or so. We'll be trading after hours. I will then publish a video of just the FOMC report itself, and that will be uploaded once again in 4K and all the rest of it, so the countries around the world can catch up. But this live stream is only available for those who are with me live right now. Okay, so let's go over to the questions. Please do tap the like button if you just tuned in, and consider subscribing as well. That would be wonderful. Let me go through our comments. So what I'm going to do, I want to make sure everybody gets their voice heard. Everyone can phone in. Everyone can have their say. What we're going to do now, just for a moment, is go members only for the next minute or so. Then we'll come back to general public. This is so I can get everyone's question and comments answered. So if you've just done a comment, if you've just done a question and I've missed it, I haven't replied it, I haven't shared it on the screen, please now come back to me right now. Members only, the next couple of minutes belongs to you. So come into the chat now and give me your comments, and I will share them on the screen. So here we go. Straight off the bat, Omran Taraki. Hello, everyone. Florida Boy Survival. They have already telegraphed a 0.25 cut. Any more or less will not be good. I can tell you now, I predicted 18 months ago we would get rate cuts in the summer of 2024. That's what I believe we're going to get. Of course, there's no guarantee yet, but that's what I believe. And I've said for 18 months, it'll be a 0.25. I've said the S&P will 3x by the end of the decade. I've said Nvidia will bottom out at 90. It did. I've said Nvidia my price target is 210 within 12 months. It will. I'm very, very confident of that because I talk to the CEOs, I talk to the people at the companies. I don't pay attention to the media, the nonsense that being sold. I don't buy into the baloney and the pump and dump. I only own the S&P, and I most certainly put my money where my mouth is. My channel is not about me trying to make money. My channel is about providing you, the viewer, the best service, because as voted by Sir Elton John as the world piano man, I've met millions of my fans in person around the world, and I don't see you as a faceless number behind a camera. I've met all my fans around the world in my 37 years of touring with my music to all the countries of the world. So I see you as real people. I take that huge responsibility, and that's why I only own the S&P. You all know, if you scroll down here, you can see 100% of my money is in the S&P. There you go, 99.86, because I've got a couple of free shares when I do referrals. But as you can see, 100% there. If I go into my Roth IRA, exactly the same. Look, if I go into the Roth IRA, this is how I own Nvidia. Look, 100% in the. There you go. See, look, 100%. This is all my money. I started with $5,000. And I've never shorted a stock. I've never done options, and here we are today at just about 114,000. And I want to be clear today. There are people who always, due to lack of education and understanding, get things wrong. I had a very unpleasant, very upsetting comment yesterday from somebody. If they come into the show, I'll try and speak to them. I really hate it, and I use the word hate on purpose. I hate when people are misinformed, have bad information, and don't understand. And this was a member of the channel who then basically called me a liar. He said, so you're bending the truth. There's everything here is 100% honest. I'm here to help people, not to promote myself or help myself or whatever. And I want to address it very quickly. When I tell people I've gone from 5,000 to 114,000 live here on the show, when I say that to people and they don't understand it, they go, how could you do that if you only own the S&P? And this particular person said, well, you've borrowed all this money on margin. That's how you've got 114,000. He doesn't understand how margin works. And I want to be absolutely clear. The money you're seeing on the screen is what I've made here in my portfolio. This is all my money. I have no money in the bank. This is my full-time thing. I'm here 12 hours a day, 5 days a week. In fact, over the weekend, I'm here as well. I've shared everything. I've answered every question. I share absolutely everything other than my social security number with you live on the show. And I have gone from 5,000 to what you see. I've just made sure that I've bought the extreme macro dips. I've never sold. I just simply add. And my income on YouTube for the first year and a half was zero. I've only been doing it 3 years. And last month, I had $1,000 from YouTube. That's it. That's all I earn. Last month, that's what I earned, and I put it in. I tell you every month on the 21st, this week will be this month the 23rd, because of the weekend. I tell you exactly what I earn on YouTube. I show you what I earn on YouTube. I tell you how much money I put in. I mean, I do more and show more on my channel than any person in the world. No one could share and show you more than I do. Otherwise, I'd have an OnlyFans account, and that would be something very different. Okay, so I couldn't share it anymore. So basically, what this person was saying was, you've borrowed money on margin, and that's why your portfolio is up. No. It's a lack of knowledge and a lack of education. You don't understand what margin is. And basically, rather than saying, could you explain to me, basically turned around and said, you're a liar and I'm done with it. Well, fine, fair enough. I tried to contact him and I can't reach him or whatever. I would hoped he would be here today. If you borrow, which is what you're doing, money on margin from your brokerage, it's not added to your cash balance. If I borrow $1 million, I don't have $1 million in my portfolio. I'll demonstrate that here. Look, there is my balance. There is my margin. There is my margin total. You can see, and there's the margin used. That's what I borrowed. No question about it. It's real money I borrowed, but it's not added to my account. My overall balance, if I look at my overall, is 113. Well, obviously, it's not added to the balance, is it? If you look at my balance, my cash, my profits and losses, my retirement account, the whole thing, the money I borrowed it would be 200,000, not 113.8. The reason for that is because when you borrow money, it doesn't add to your balance. What adds to your balance is the profit and the loss, the gains and the losses. That's what gets added to your balance. Okay, so it's very, very important. So if I borrow $1 million today on margin, I don't suddenly have $1 million. It's not like going to the bank and borrowing $1 million and sticking it in your portfolio. You've got $1 million. That's not how margin works. I get very upset when people don't understand that. I had another incident where a member said, I never get I never get you to reply to me. And you said to me, as a member, you'd reply to all of my comments. I reply to all of my members' comments. Unless they do replies to replies, I don't see that. Do a fresh comment. I spend hours in the evening replying to every single member by hand on my own, no AI myself. This person used the word tits, T-I-T-S, in their username. It's a profanity. So it basically, YouTube constantly hides it. I see it. It says it's spam. I then accept it and go, yeah, show it. It's okay. This person's just using profanity. They don't know. I'm trying to show it. But then I can't reply to it. It doesn't let me. So that's just the way it works. So, there are always people that get left behind who then think, because we live in a cynical world, right? No, most people cannot believe somebody would be so open, so honest. But listen, guys, I am the real deal, all right? I do this to help people. I love doing this. It's the greatest job in the world. I've had everything I've ever wanted to do. I've done everything I've ever wanted to do. I've got more than I deserve. I'm here to help people. I don't do it to sell videos. I've been live since 3 o'clock this morning. This live stream, if I get 40,000, if I get 40,000 views, which I hope I will, it might earn me about $280. That's it. After less YouTube's commission, less taxes, about $200, and it will be by far my biggest ever live stream video I've ever done. Most videos I do make about $1. That's it. So I don't do it for the money. I could just go out and hire a theater tomorrow night and make $20,000 in an hour, or do a private gig for, in Dallas for $5,000 in someone's house. So please understand, if you don't understand something, ask me. I will explain it to you. Right, we've got 15 minutes to go, and let me go through all the members' questions, and then I'll open it up to the general public once again. So here we go. 50 basis point confirmed. No, it's not. Nothing's confirmed. That's not true. You're not one of my members. Hang on. The non-members often say nonsense. That's rubbish. You may stick up current range until October. Buy him. Hang on a minute. We've got non-members getting through here. Probably at this point, if they don't cut rates at all, it'd be a disaster. That's right. No one says that. We could easily have a no rate cut. Hello, everyone. I agree with responding to random comment from somebody saying they wouldn't be surprised if there was no cut. Mike, hello, everyone. Good afternoon. Savage Faith Creations. Wonderful to see you here. Stacey, with your professional channel. Cool. I will be going back to non-members in a moment. Let me just get through the members' questions. Hi there. What's your educated guess on what's going to happen with Nvidia stock after the announcement? I don't know where it's going to go today. Nobody does. People want to make up predictions. I won't do that. I don't know. What I do know... hang on a minute. There's a bit of an argument breaking out here.
The banks, I'm like, let it all happen. You mean I tell you what, you want industries where there is exactly one giant at the top, and you think prices are going to come down? Not going to happen.
Senator Elizabeth Warren.
Bit of an argument going on there for some reason. Anyway, I like to keep you updated with CNBC as we go throughout the afternoon. I know that Nvidia is going to $210 within 12 months. That's all I care about. The ups and downs of the day doesn't concern me. I'm not in the horse trading business. I will just simply buy more. I've got $20,000 on standby to buy a 10% drop. That's it. Looks good. Love the attire, Martyn. Thank you very much indeed, Vanessa. Thank you. Please subscribe to the channel, the music channel. Thank you very much indeed. Let me post that. I will come back to non-members in a moment. I'm just getting through the comments here. Hi, Martyn. Hi, Dylan Wilson. Lucasade family. Our first super chat of the day.
Rallo1 donated $2 through a super chat. Thank you for the coverage, Martyn.
You're welcome. If you do a super chat, it shows it on the screen, reads it out, and everybody can hear, and you can share any information. If you are a non-member, anyone can do that. No, she likes her privacy. She has the shadow person. I'm not sure what that is there. I figured that. I would be awesome to catch her in the corner of the screen every now and again. Who are we talking about? Leah? Mike, thank you for explaining this, Martyn. A lot of people don't understand how margin works.
Mike 166A donated $2 through a super chat. Go, go, go.
Go, go, go. Thank you, Mike. I trust you are on the 210 NVIDIA. My 200K will be 3,000. How long, though? 12 months. Martyn, subscribing and membership to your channel is one of the best things I've ever done in a while. Thanks for the smiles and laughter you bring to my life. Charles Kahi, that's what the family is all about. Honest, real, fun, everyday information. Thank you. Appreciate it. Matt, he thinks 12 months, 15 minutes now, yet 10 minutes to go. Please subscribe to my music channel, says James. Thank you. What are your thoughts about TLT in the reference to the rate cuts? TLT, I've got no thoughts on that. 12 months, it's cool. Yes, Mike, mine, great look, man. Coffee is on. Yes, it is. Here we go. I'll be with you around to the end of the stream, buddy. I'll be here for several hours. Okay. Can't stand that woman on the TV. Oh, I see. The hosts are telling her that it is not a good idea. Okay, Warren. Okay, super chat. We did that. David Ewan. Leah, hello. Is Leah in the chat, is she? What do you believe to be a good buy with Nvidia? I have 200 at 106 right now and want more. What do you believe to be a good buy? Well, kind of, you've answered your own question, right? If you believe it's going to 200, what's wrong with 150? What's wrong with 180? Doesn't matter, does it? If stock's going up, big money always comes in on the way up. Poor money buys on the way down because they're afraid. Big money buys on the way up. They know where it's going. Warren Buffett could come in and pay $150 a share. Would he care? No, he's doing it because he knows it's going to 200 or more than that.
David Gwynn donated $4.99 through a super chat. I know it's not much, but here is for the time you've put in today.
It's very much appreciated. $4.99 is a huge super chat. Thank you very much indeed. Yeah, I've been up all night. I was in the studio at 3 a.m. this morning, translating the show so it would reach the whole world. So that's what I've been doing all night. Thank you for recognizing that. That's nice. Thank you. Folks that don't work as hard in a week as Martyn does in a day sure likes to gripe at him. Folks that don't work as hard as a week as Martyn works in a day sure like to gripe at him. Matt Dillon, yeah. From Brazil, hi Martyn, which you could put, which cut would be better for the market in your opinion? Makes no difference a month from now, none whatsoever. What I'm interested in is the dovish report. What I'm interested in is how he addresses the news reporters at the end of the conference. What I'm interested in is the promise of rate cuts for the next 6 to 12 months. What I'm interested in, more important than anything else, is a strong economy so we have a fantastic earnings in October. That is why I invest. Not for today. Perhaps Leah will join Martyn on the Christmas show. She might one day. Cheers. Thank you very much. I like the reasoning. Very solid. Thank you. You are very welcome. Right, let me go over once again to general public. I've given my members all the chance to comment and have their names on the screen. So here we go. We'll go over to general public now. We've got 8 minutes to go. Just a few moments to go now before
trade-off between
the rates are out.
We know exactly what we want. We'll go there now versus optionality. There's things we're not sure about. Let's build some optionality into it. To me, a
showtime is coming up. Just a few minutes.
Splits the difference. All right, we're pretty sure that no matter what happens in the economy, we're going to want rates lower than they are today, 6 to 12 months from now. But there are things that could go wrong. Maybe inflation does turn out to be a little bit stickier. Maybe there's a huge surge in the stock market, and this, speculative.
We're going to keep watching all the news. We're going to bring you everything live. You've got every possible bit of information here coming in. I love your channel, sir. Thank you very much indeed. Right, we've got a few minutes to go. I only want to mention this a couple of times today. I just showed you my very proud Jack White plaque that I received for raising lots of money for disabled children, Lions Club. I just did, 2 years ago, the global telethon for the Lions Club, the global telethon. Every Lions Club in the world received my broadcast to raise money for the Lions Club. And in my lifetime, I've raised millions for charity, but I now want to do it in a better way. And I want to go to all of my investors, all my members, all of my viewers, and ask you to help me. I don't want any of your money. I don't want you to buy anything. I don't want you to download anything. I don't want you to do anything whatsoever. I will do everything. I will do all the work. So what am I talking about? I'm talking about this. This is my music channel. I was voted by Elton John as the World Piano Man. If you've never seen this, let me show you. You can see I had a Vegas show. This is my Las Vegas show here with the British Philharmonic Orchestra. You can see all this here with me dancing with the showgirls. I've got videos with me doing a duet with Michael Jackson on screen. Paul McCartney. I worked with Wings. All kinds of stuff. Here's me wearing Elton John's jacket he wore in Candle in the Wind, Lion King. Lots of stuff. I did Phantom of the Opera. Anyway, whatever. The point is, my channel is a very small channel because my audience are much older. They don't use YouTube around the world. They see me in live concerts. So my audience aren't on YouTube, but the fundraiser events are a global audience. So what I want to do is I want you to help me help me to raise millions of bucks for charity with no fees, no cost, no drama. I do all the work. It doesn't benefit me in any way other than it fills me with pleasure. That's it, for doing it. So I want you to help me. There is the link in the chat of my music channel. This is what happens. This is how it works. At 10,000 subscribers, YouTube will turn on charitable giving. You see I'm at 6,390 on my music channel, not the investment channel, the music channel. At 10,000 subscribers, they will turn on charitable giving. What that means is, it means I can do fundraiser concerts, videos, events, live shows, whatever you like, where it goes, all the money is linked to a registered charity. You have to be a registered charity to be able to do it, and it links the event. It will say on the event, this is linked to Oxfam, Children in Need, whatever it might be. So what I'm asking you is this. If you click on that link I've just given you, I'll give it to you again, and you subscribe to my music channel, you're helping me be able to raise money for charities all around the world. But here's where it gets really exciting. If you click on subscribe right now, I put the link in the chat.
Liam Sanderson donated £5 through a super chat. Much love, Martin. I've watched you for a while now and I enjoy the community you have created. I made a few quid on Tory thanks to you. England, York.
Thank you very much. Much appreciated. If you click on that link and subscribe to my channel, basically this is what happens. I'll get another subscriber on the way to 10,000 subscribers. I've only got 1 minute to tell you all this. If you tell all your friends at work, your place of work, wherever you hang out, whatever, to do the same, come back to me and say, Martin, everyone at work, everyone at my business, whatever, all my friends, subscribe to you. I see you're now at 10,000 subscribers. Would you now do a fundraiser event for the charity that I like? Cancer research, children in need, whatever it is, as long as it's a registered charity that YouTube can link to, I will say yes. There's the first one. Thank you very much. I will then do the concert. I will raise money for your charity, and it will all go directly to your charity. No fees,
our friend David Kelly,
no costs, nothing at all. It'll all go. There are no credit card fees, no charges, no taxes, nothing. And I will do that for you. So thank you ever so much, everybody who's doing it. We are 2 minutes away from the announcement. So we're just 2 minutes away. So I'm not going to mention this again now until the end of the report. So this is the best time to do it. Please, 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 everybody here has money, and I'm not even asking you for money. Think of those that we can help by you simply subscribing to my channel. Remember, when I do shows on my channel, even when there are ads, I earn zero because it's all copyrighted music. It makes no money for me. The only way I make money is on my Friday night concerts, when I do a party, when I do singing and people give me super chats, right? Other than that, it doesn't make me money, but it will give me great pleasure to be able to raise millions of dollars and get more Jack White trophies like this one. So please subscribe to it. A couple of you have done it, maybe more. Not everyone's got public subscribers. Let me know when I get to 10,000 and I will do the charity events for you. I don't care how many I do. I will do them all for you to help raise money for you, your charity, and it will go directly. Nothing goes to me, and I really appreciate your time in thinking about that. We've got 1 minute to go. Has everyone tapped the like button? Has everyone subscribed? Okay, so here is the event. Let me just close the poll. 785 votes, 49% say pump, 34% say dump. We've got 50 seconds to go. 17% are undecided. Let me just clear this away and give you the music channel party on Friday night. I invite all of you for a party. We're celebrating, so live party on Friday. I'm also doing 2 hours of price predictions for you as well. There you go. That's the event for Friday. We've got 30 seconds to go. Replace the pin. There it is. This is the event. I turn off the ads. There are no ads every Friday. I give away this event here. I do 2 hours of ad-free price prediction of the upcoming week, and then I do your music for you in the evening. Right, here we go. Rate decision. Seconds away. Here it comes.
Is that if they do go too fast and inflation then starts to perk up a little bit too high, then I think they've basically signaled to the market that they're very aggressive and that this could create a bigger problem down the road. So in my view, I think 25 basis points on a risk-adjusted basis is more warranted, but that doesn't mean that a very good case could be made for 50.
All right, Jim, thanks very much. We'll come back to you in a very short time, but we are just seconds now away from the Fed's decision on interest rates. And for that, let's go to Steve Leisman.
0.25, I said.
50 basis points, the Federal Reserve cutting interest rates by 50 basis points to a new range of 4 3/4 to 5%. There was one dissent. Fed Governor Michelle Bowman.
The markets are loving this.
But 11 voting in favor of 50. It might have been close. I'll come back to that at the end of this report. The statement says the committee will consider additional adjustments to policy based on the data, the outlook, and the balance of risks. The summary of economic projections saying an additional 50 is expected or forecast by the
my margin's going to come down a ton.
Year, for a total of 100 this year, that would bring the median down to 4.4%, or an additional 50 basis points from where we are right now.
All-time highs. All-time highs.
Cuts expected
115,000
down to 3.4%. All of that a bit above where the market is priced, and the new long-run rate would hit 2.9%. That's up a tick by the year 2026. The statement now says the Fed is firmly committed to supporting both maximum employment and the 2% inflation target. Before and for many months before this, the
market is loving it,
saying it was focused on the inflation target. The committee has gained greater confidence, the statement said, that inflation is moving to that 2% target, and risks to both sides of the mandate now are said to be roughly in balance. On the economic description, the economies continue to expand, it says, at a solid pace. Job gains, however, have slowed. Inflation making further progress towards 2%, but remains elevated. It's seen declining to 2.3% this year, 2.1% next year, and hitting the target 2% by 2026. Unemployment, the outlook for unemployment did tick up. I think that's important to what the Fed said here and what it did. Up 0.4 to 4.4%, 2 ticks higher than it is right now. Growth pegged at 2%, slightly above the 1.8 potential, well into 2027. Now, 9 officials in the dot plot wanted to do 75 basis points or less this year, and 10 wanted to do 100 or more. So it may have been a very close call as to what was actually wanted around the table.
Margin's going to come down
25 or 50 today, but they decided ultimately with 11 voting in favor of the 50 basis point rate cut. Tyler.
All right, Steve, stick around as we get back to our panel for some reaction. Claudia, you were the one who said 50 basis point cut, and that's what happened
now then,
here.
Don't tune out. The best part hasn't yet happened. The volatility is just warming up. What happens now? We wait a few minutes before we go into the actual presentation, And that is even then not the biggest part. What happens after that is we then get the press report at the end. So it's all yet to build up. This is just the beginning of it. I could see a 10% rally today. My portfolio could go today to 120,000 very, very easily. Remember, I've got $200,000 invested now. 200,000 to 10% is 20 grand. 20 grand today. I could go up to 135,000 today live on the show. What he just said was very, very good news. It's more than I thought. I said 0.25. It was always on the fence. But it shows strength, actually. So let's watch what happens. There's going to be a lot of trading now. The volatility hasn't even started. So we're going to get some reaction from them. But what's important is what happens in a minute when we go to Jerome Powell and then, of course, the meeting afterwards, the press conference afterwards. Nvidia is looking great. It's going to be 210 now. If you're in margin like I am, your margin payments are going to come down 0.5%. I hope. I mean, Robinhood don't have to do that. They might go, we're already the lowest in the business. We're not bringing our rates down. They could do that. That would be disappointing. I would like that to happen now if we're dropping 0.5%. But this is the first time rates have come down in 4 years. A huge, huge day for home owners. House prices are going to fly up now. People are going to buy houses. Small caps are going to do well. The whole economy is going to do well. Right, let's go over and get some reaction. Here we go.
Look, I mean, to some degree, it certainly could, but it really depends on what happens to the labor markets. Look, I see this as a three-dimensional problem for the Fed. Number one, where do they see the neutral policy rate being? Number two, how quickly do they want to get there? And number three, what is the employment situation? Is the employment situation going to deteriorate more quickly? What the Fed is signaling today is that they are very concerned that the unemployment rate could start to accelerate higher. So to me, yes,
they're giving the economy a boost, essentially.
Might unanchor inflation. I think it's
Can everyone tap the like button, please? Help us share this stream out to more people.
It does signal that they are worried that there could be a faster pace of layoffs and job losses and things like that. So I think the markets, while they may be happy that the Fed cut interest rates, they might have to ask the question as why they're going as fast as they're going. And
we are 4 away from 36,000 subscribers. Who's going to be my 36,000 subscriber? Please subscribe to me right now. It's a big moment coming up.
That perversely, sometimes cutting interest rates can slow down activity as people wait for interest rates to go even lower.
Right. Well, the first thing I'd say is we know from this cycle already that the comparisons back to history are going to be really tricky. We haven't had a kind of easing cycle like what the Fed has started us into in a very long time. So and we've had a lot of what are Fed interest rates even doing in this cycle. So I think there is that issue. Now, markets, and this will be a very important part of the press conference today, is this messaging from Powell about going forward with interest rates. You can get that quote unquote forward guidance and have the market rates look out ahead.
Now, don't chase this. I'm going to put a warning out now. Please do not chase the market. Please do not buy the market. You should already be in. Do not chase this now. Investors are already in. Traders, FOMO is buying the market. Yet, we're going to get a 3x. New member.
Is Americans actually making a lot of money on high rates if they have their money in money
Keith,
market funds.
stand by. I will give you all your perks in a moment. Let me give you some of the things now. I'll explain more later. Here is your membership video. Please watch this.
And at the margin, take a few dollars out of what's been a very lucrative place to park.
Here are all the links you need.
Well, I don't think it'll have that effect. I mean, I do think that it squeezes the income of older Americans just a bit. But what it does, I think it will introduce the question of, well, how much is the economy slowing? And that is not necessarily good for the equity market, no matter how much it, positively responds to what they've just done today. I mean, as I say, I think the economy is strong enough to handle this. But overall,
who's going to be my 36,000 subscriber? One more to go. Who's going to be 36,000?
Comfort with inflation.
One more.
We've got lower gasoline prices down 70 cents year over year. We feel good about growth, but honestly, inflation's
there it is. Congratulations, folks.
Move today. If he stresses progress on inflation rather than
thank you very much indeed.
He'll do the economy a great service, and I think that'll make this a much safer cut.
Steve, Claudia made the point, I invite you to pick up on whatever thought or tangent you would like, but Claudia made the point that this is a different a different circumstance. We haven't had this kind of initiation of a rate-cutting cycle in a long time, certainly not under these kinds of circumstances. When we've had rate-cutting cycles before, it's been in response to economic crises like the pandemic, like the financial crisis in 2007, 2008, 2009. Here, it's a different set of circumstances. Economy's pretty good. Very little sort of idea that a recession is on the horizon. Talk to me through that. Talk me through that, if you wouldn't mind.
Well, Claudia studied history. That's why she's famous in our world. I've studied history maybe a little bit less, and I can tell you with experience that nothing works, Tyler, in terms of comparing this to
Right, let's put your comment on the screen. Here comes our first selling. Let's just take a break here from this and focus on your thoughts now. So we've got, yes, says Mike. Thanks, Martyn. Been following you for a while. Thank you, Keith Schumann. Lovely stuff, says Dylan. Free membership for a year to 36,000. You'll be lucky. It's only $2. I can't make it any cheaper. Congratulations, Martyn. Thank you. Congratulations, 36,000. Congratulations, Martyn. Thank you, guys. Appreciate all of you. It's a big moment. Yeah, it's a big day. Congratulations. Afternoon, everyone. Red today. Well deserved. Thank you very much indeed. Let's go back to the news. Very exciting day. We've got 20 minutes before we go to the conference. Stand by.
Say, Tyler, is 50 basis points of what could be an easy 100, 150 that the Fed can take, and do so while remaining restrictive and not even be in danger of sort of further stimulating the economy. The game now is going to be restraining the market and its forward pricing of where the Fed is going, because that forward pricing, Tyler, as you know, works itself into the real economy through the floating rate mechanism that allows businesses to go out and
now we've got a very quick announcement to make just before we go to the conference. We'll come back to that in a moment. This channel, folks, would not be here without our members. It's our members that provide this channel for everyone. Those that are members, 98% of our live viewers are members, higher than any other channel in the world, have the highest engagement rate of any channel in the world, even more than Mr. Beast, way more, in fact, than Mr. Beast and Meet Kevin combined. I'll tell you that right now, 98%. So because of that, I don't take any sponsorship money from anyone. I don't take corporate money from anyone, sponsorship money from anyone. I only allow my members and my viewers to sponsor the channel. So would you please, I promised I would do it on today's show, being a record-breaking show. This will only take 1 minute, so please stand by. We have 2 sponsors who pay $99 a month to reach 65 countries, thousands of views a day, hundreds of thousands of views a week, and this is what they get for $99. They're on the homepage of my channel, but whenever it's every day I mention this. So the first one is Rick McGrath. Rick McGrath has a friend who... hang on a minute, why isn't that working? Rick, hang on. Why isn't that working? One of my scenes isn't working. That's annoying. What's going on? Go back up to... that's really annoying. Why aren't you changing? Let me change scenes. I've got a lockup. Okay, let me stay here and try and fix the problem.
Markets have been pricing for the Fed to cut 200, 250 basis points. If that doesn't happen, that represents a disappointment to that asset class, and that could lead to a sell-off maybe in 2025. Also, if the Fed doesn't cut this full amount that's being priced in today, does that represent a disappointment even to the equity markets at some point in time, because equities are counting on this 250 basis point rate cut as well. So what's ultimately going to matter in this thing is going to be the data. It's going to be the employment situation. And ultimately, we're going to see how inflation creeps into this as well. So look, we're at a good starting point right now. The Fed has done something very aggressive. This is friendly to risky assets. There's no question about that. But ultimately, the question we need to ask ourselves is, where does this end? And that's good. That termination value is going to determine the value of asset prices in the medium term.
I don't know how to fix this.
Yeah, no, and we have to go. But I just wanted to kind of go back to that dollar chart, which is showing softness. And again, you know, on the margin, you're talking about possibly reigniting certain commodity prices and import inflation. Steve, last word.
Kelly, just give you a quick pricing here. We're at a 62% probability of another 25 in November, but a 93% probability of a 50 in December, which seems to be roughly in line. Maybe it's a quarter heavy, given what your last guest was saying.
I've got a technical issue I'm just trying to solve while I'm live.
Don't seem crazily at odds over the outlook. Maybe a little bit more aggressive next year, but right now they're within 25 basis points. They'll resolve that, but right now 25 built in for November, 50 built in for December. And
the Dow has now gone negative. So it spiked to record highs and has now given those up as maybe it's changed its mind now, believing more in the hard landing story. Well, thanks to our panel. We appreciate you joining us today, David Kelly, Claudia Sahm, and Jim Karen. Let's get to Mike Santoli now. He's over at the New York Stock Exchange. Mike, what do you make of this stock market reaction?
Well, in some sense, Kelly, it is the typical, first twitch is maybe the wrong move, and then there's going to be a backlash, and then there's going to be a rethink of the backlash all in the next couple of hours.
In other words, you're talking nonsense.
Not unusual.
There's going to be this and that and the other, and people are greedy and taking profits and then selling and then buying back. The markets are going to go up, then they're going to go down. They're going to go up, then they're going to go down. Why just say you don't know, all right? Just say you don't know. That's the reality of it.
It has been pretty reassuring. I still think it would have made the market just that much more sensitive to any softness in data over the next 7 weeks until the next Fed meeting, and maybe left the impression the Fed was willing to fall behind, even if it's not behind just yet. All that mixed together, I think, has to be put against the fact that the S&P 500 was already near a record high, already at 21 times forward earnings, already pretty much juiced up on soft landing expectations. I don't mean that it's overdone, but it's absolutely based on the premise that we probably are going to keep an expansionary economy and rates are going to be tilting lower at some angle. So
this is because I've been streaming for like nearly 12 hours.
Yields up a little more.
The stream deck has gone misbehaving.
Curve. Really not an aggressive response in what you would consider to be the playbook for the Fed cut, meaning small caps and regional banks and things like that.
I'm running without a joystick this afternoon then.
A little bit more on a week-to-date basis. So maybe we'll see if that's to come as we, as we get through the day.
All right, Mike, thanks very much. Let's now go to Chicago and Rick Santelli for the reaction in the bond market.
Okay,
hey,
I apologize. Things will not be as smooth as they normally are, so I'm going to back up procedures. Unfortunately, it's because I've been streaming for nearly 12 hours. So I just mentioned to you just briefly before I started that we do have a couple of sponsors. They pay $99. They're one of our members, two of our members. So first of all, Rick McGrath is trying to help this guy here raise money for this community in the third world. He's trying to raise money for this charity. So I'm not asking you to buy anything, do anything, download anything or whatever. But he started with 4 subscribers a few weeks ago. We've now got him to 53. So he can promote his charity work, okay? So what I'd like to do is give everybody this link in the chat. If you could click subscribe to his YouTube channel, it helps him grow so he can go live and tell everybody about his charity work with his friend here. It'd be wonderful if you could do that. This guy is a member of my channel. He pays $99 a month to support my channel. In return, he gets this, plus he's on the homepage of my channel and I mention it every day. But today is a really great day. So let's get him to 100 subscribers today. It would be amazing if everyone could do that. There's number one. Our second one, I'm only going to take 1 minute and I'll be right back with the information, guys, is this company here. They are a wedding business. They want their website to be the #1 wedding site in the world, and I said I can deliver that. So here is Charlotte May Weddings from one of our members. All you have to do is click on the website. It's a secure website. You haven't got to buy anything, download anything, do anything, but simply clicking on their website. If people all around the world have clicked on their website today, obviously it ranks up. Simple as that. So if you could do that, that would be absolutely fantastic. If you could do that, it would be very, very much appreciated. Okay, has everybody done that? All right, let's try and go back. I do have some issues today. I hope I can get through this without any major problems. All right, let's go and listen in once again to CNBC.
4.2%. There used to be a time when that was considered
just 10 minutes ago before the conference begins.
When you look at some of the averages on job growth, they're still on most metrics above 100,000. So with equities making new highs, this is a unique Fed situation, and some Fed watchers are going to be scratching their head. Back to you.
The yield curve has de-inverted. Am I correct?
Yes. Yes. Right now you're at 9.6. Your lower yields on the 2s, your higher yields on the 10s.
All right. Rick Santelli, thanks very much. Appreciate it.
And markets are reacting
10 minutes ago
to the Fed's kind of surprise decision. Look, going into 2 p.m., it was almost a 50-50.
We'll come back to that in a few moments' time. Let's go through all of our comments. So frustrating, the biggest show I've ever done, and I've got a complete disconnection from my Stream Deck. I can't even tell you how frustrating this is. I've got backups. I'm running on backups, but it's not as seamless as I'd like it. And I've tried to restart it. It's just not speaking to my Ecamm Live, I'm afraid. But we can probably get through it, sort of. You won't know the difference, I don't think. I don't know. Hopefully, it won't be too bad. It's very frustrating. I don't know how to fix it live. Oh well. That's annoying. Anyway, whatever. We've got just 10 minutes to go before the event starts. If everyone could tap the like button, that would be fantastic. And then we'll be listening in to Fed Jerome Powell. Very exciting. Not long to go. So let's go for our positions. And you can see, in fact, I'm going to show you all the positions now. Nvidia, no surprise, 210 is on the cards within 12 months. Our portfolio is at new all-time highs again. A few moments ago, it was 115,000, which is another all-time high. So we're just literally a little breeze off that again. We could see 120 today. Most of the volatility will come later during the conference, so stand by for that. It's a very exciting day. Now then, I was projecting today, that we could get 40,000 watch this event. 5,859 so far, and the conference hasn't started yet. So we're not at 40,000 anywhere near, but 5,859 right now. Let's see how that goes later on. Let's see if it starts to zoom up. Of course, some people watch this later. Let me read the comment. This is the greatest day, Jason Davis. It is indeed. Martin, maybe you can dump cache files on StreamYard. I don't use StreamYard. I use Ecamm Live. It's my Stream Deck. Dump some cache. You could be right there. I could try and clear some RAM. Let me see if that works. Let me free up some RAM, see if that works. I don't think so, but I'll try it anyway. That's freeing up some RAM. Let's see what happens there. We'll see what happens. It's been running. I've been running 12 hours, and it's just one of those things. Team Fusion. We've just did a big promotion for your Charlotte May weddings, and we've got 506 people watching, and I'm sure a good number of those clicked on your website. You should be seeing your website rank up now. Here's Team Fusion, the owner of Charlotte May Weddings. I'm sure he'll be very appreciative of everyone doing that. Congratulations to all. Kevin B. Lovely to have Kevin B. How are you this afternoon? Lovely to have you here. Tom Chan, I sold some Nvidia 116. I wouldn't have done that. I think Nvidia is going to 210 within 12 months, but there you go. It's been massively oversold recently. Let me try it. I want to do something here. I've got 9 minutes to go. Let me physically unplug it. This is going to be difficult, but I'm going to try. Right. I just physically unplugged it. That might have been a mistake. That might have been a really big mistake. Okay, let's see. I don't think that's helped at all. It's basically lost connection. It's not the application. It's the connection between the devices. So that didn't work out very well, but never mind. I've done the best I can. Let me restart it here. Okay. 7 minutes to go, and we'll be away. This is one of those restart the computer jobs, but there you go. Can't do that in the middle of a stream, can I? No, it ain't gonna play ball today, I'm afraid. Let's see, let's try this. How long have we got? We got 8 minutes to go. Yeah, I can see. So it's not even seeing Ecamm Live. All right, forget it. We're running on the old-fashioned joystick today. No technology involved. Everything's running on the joystick. Okay, let's go back over to here.
Dropping 50 basis points today, we'd have to have a debate. The deposit rate is going to be sticky. It's not 30 years ago when the banks controlled all of the deposits and they would lower rates on the deposit side and keep loans higher. The reverse happens now. There's so much competition for consumer deposits, money markets.
So you think they were sticky when they were low. Banks didn't want to raise deposit rates. Yep. Now you think they're going to be sticky at a higher level?
Yes, we're going to see the impact of non-banks, brokerage firms, these specialty lenders. I was out looking in the green room at current money market rates. There's some places are offering over 5% still. So they're not going to be dropping 50 basis points when that loan revenue drives for traditional lenders. Now, this is the opportunity is to go to a diversified financial, one that has capital markets,
I've
trading,
just got time to do this.
But a traditional
this was requested
bank
by a
lender,
number of members today, and I wanted to do this.
Quickly on bonds,
let me see if I can control it. Yes, I can control my devices like this.
Everyone's been making the
call. We've got control here.
We've been riding that lengthening duration. I'm going to pause on that right now. It's more of a flat yield curve. I'd like to see if this is a 50 basis point because of recession. I think we just hold steady, duration neutral right now.
All right, Mark, thank you very much. Mark Avalon, appreciate it.
Good to be here.
Okay, we've got 5 minutes to go before the event starts, and I wanted to do this in honor of the United States. I wanted to do this in honor of the greatest economy in the world, and I also wanted to do it in honor for all of those who serve in the military, not just in the United States, but all around the world. So I was asked to do this. I've actually recorded this and performed this across the United States on American football fields. So this is my honor and my tribute to the United States. Please show some love. You may want to stand, but we are showing a huge respect and love today of the United States of America. Are you ready? This is my tribute to the United States. This is the anthem of the United States of America.
Can you see by the dawn's early light what so proudly we held at the twilight's last gleaming, whose broad stripes and bright stars through the perilous fight. Oh, the ramparts we watched were so gallantly streaming, and the rockets' red glare, the bombs bursting in air, gave proof through the night that our flag was still there. Oh, say does that star-spangled banner yet wave? Oh, the land of the free and the home of the
There you go. We've got 2 minutes to go before Jerome Powell takes the stage. No, that is not auto-tune at all. There's no auto-tune here at all. I was voted by Sir Elton John as the World Piano Man. I've had my own Vegas show. I've performed all around the world. I was named by Sir Elton John as the World Piano Man. I performed in the Phantom of the Opera. I do not use auto-tune. I can do it live right now, sitting here talking to you anytime you like. In fact, I can do 14 voices in 7 different languages live right in front of you right now.
Oh, say, can you see by the dawn's...
There you go. In any voice you want.
Love on the rocks, hey, no surprise. Fly me to the moon.
Another day is gone. I'm still all alone. There you go. No auto-tune, 100% live. Just me on my own doing what I do. All right. Okay. Let's get ready to rumble. We're just seconds away to go from Jerome Powell about to take the stage. We're very, very excited. I hope you are. We're just moments away. So stand by. We're waiting to go over to Jerome Powell. We will bring him up on the screen in just a couple of moments. Not that long to go. And what we'll do is we'll clear away our tickers as well. I'm doing everything manually today. If you just tuned in, you'll know I'm flying manually today. My Stream Deck has disconnected from my computers because I've been live for 12 hours. I've been up all night trying to reach the world with this broadcast. We are running a poll in the chat. If you could tap the like button, I can't put Mr. Mini-Me on the screen. If you could subscribe, it would be very, very nice, and I'd very much appreciate it. Okay? All right. We've got 1 minute to go. Here we go. We're going to stand by now.
Powell to explain, no, the economy's not that bad, and so I'm just trying to think through this. You know, it is clear, because of where the decision landed, that the Federal Open Market Committee had a lot to talk about in the last few days, last few weeks, and so he's going to come out and communicate the plan. And so I don't want to hazard a guess as to exactly what that is. Now, you know, the action is pretty dovish today, so going more dovish might, push the markets even further. And I think if you look at the summary projections, you don't have Fed officials on their own going much, much more dovish than where, say, the markets are right now. So I think a lot of it is just explaining where we're at and where we're headed, and largely there seems to be some agreement between the Fed and the market. So they don't, he doesn't need to do anything too fancy here.
Can we go all the way back to our conversation in the last hour with Elizabeth Warren? I'd like to ask an economist, how much of the inflation that has taken place over the past 3 to 4 years is related to price gouging? Literal price gouging.
The pandemic kicked off a lot of disruptions, supply chains, also in the labor force, labor shortages. And we are going to look back, and I think the research more and more points to the COVID disruptions are the key source. Now, COVID created a lot of circumstances, right? It did shift some of the pricing power. It did. There were opportunities, and also with the war in Ukraine. So it gets into this very tricky, what's the cause, what's the problem? So, but I think we got to look back at the pandemic was the root of evil here. We have to leave it
there, Claudia.
Here we go.
The chair is now ready to speak. Let's listen.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up, but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a 0.5 percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking our questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you weren't thinking about a 50.
Please tap the like button, please. Share this stream out to more people. Hopefully we'll get a record-breaking audience today. Please do that.
What
Thank you.
changed that made the committee go 50, and how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
So, okay, a lot of questions in there. Let me jump in. Since the last meeting,
Happy mood today. It's nice.
We've had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. So we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and third?
How do we make sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in? Based on what shall we make that call? Thank you.
Sure. So a couple things. A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members, rather, of the committee are thinking today, assuming that their particular forecasts are realized.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher than Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect, in the base case, to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2%, inflation's down to a few tenths above 2. So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment moving to a more sustainable level. So that the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is appropriate in real time. But what you have is our individual accumulation of individual estimates of what that will be in the base case.
Howard Schneider with Reuters. How close was this in terms of the decision? You do have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I think we had a good discussion. If you go back, I talked about this at Jackson Hole, but I didn't address the question of the size of the cut, left it open, and I think we left it open going into blackout. And so there was a lot of discussion back and forth, good diversity of division, excellent discussion today. I think there was also broad support for the decision that the committee voted on. So I would add, though, look at the SEP. All 19 of the participants wrote down multiple cuts this year, all 19. That's a big change from June, right? 7 of them wrote down 3 or more, and 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, there is a dissent, and there's a range of views, but there's actually a lot of common ground as well.
Follow up to that, now that this is in the books, can you give us some guidance as sort of follow up to Steve on the pacing here? Would you expect this to be running every other meeting once we get into next year? For example?
We're going to take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this. We made a good, strong start to this, and that's really, frankly, a sign of our confidence. Confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability. We can, make a good, strong start, but. And I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and make our decisions as we go.
Gina. Hi, Chair Powell. Gina Smilik of the New York Times. Thanks for taking our questions. You and your colleagues in your economic projections today see the unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see as the risks?
So, again, the labor market is actually in solid condition. And our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
Sorry, Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, does today's action constitute a catch-up in action given recent substantial revisions to the employment data? Or is this larger than typical rate cut a function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue?
Okay. Multiple questions in there. But so I would say we don't think we're behind. We do not think we think this is timely. But I think you can take this as a sign of our commitment not to get behind. So it's a strong move. So your other question was?
Well, is this about what happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
So I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut, many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably under 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace. You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is, look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level, and we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower, but that's what the base case says.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred about how the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
Colby. Thank you. Colby Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply? Or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. Meant by many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market, but this is more sort of 2018-17. So the labor market bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
And just on the point about starting to see rising layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So our plan, of course, has been to begin to recalibrate. And as you know, we're not seeing rising claims. We're not seeing rising layoffs. We're not seeing that, and we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that, because there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions meeting by meeting.
Michael McKee with Bloomberg TV and Radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year, 200 basis points of cuts just to maintain a higher unemployment rate. Would you be moving to a more preemptive monetary policy style rather than, as you did with inflation, waiting until the data gave you a signal?
No, we're going to be watching all of the data, right? So if, as I mentioned in my remarks, if the labor market were to slow unexpectedly, then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandate, though. We have greater confidence now that inflation is moving down to 2%, but at the same time, our plan is that we will be at 2%, over time. So, and policy we think is still restrictive, so that should still be happening.
I'm just curious as to how sensitive you'll be to the labor market, since you forecast we are going to see higher unemployment and it is going to take a significant amount of monetary easing to just maintain it.
So, what I would say is we don't think we need to see further loosening in labor market conditions to get inflation down to 2%. But we have a dual mandate, and I think you can take this whole action as take a step back. What have we been trying to achieve? We're trying to achieve a situation where we restore price stability without the kind of painful increase in unemployment that has come sometimes with disinflation. That's what we're trying to do. And I think you can take today's action as a sign of our strong commitment to achieve that goal.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You're describing this view that you don't think you're behind when it comes to the job market. Can you walk us through the specific data points that you found to be most helpful in the discussions at this meeting? You've mentioned a couple, but would you be able to walk us through what that dashboard told you as far as what you know about the job market now?
Sure. So we'll start with unemployment, which is the single most important one probably. You're at 4.2%. That's, I know that's higher than we were used to seeing numbers in the mid and even below mid threes last year. But if you look back over the sweep of the years, that's a very healthy unemployment rate. And anything in the low fours is a good labor market. So that's one thing. Participation is at high levels. It's, we're adjusted for demographics, for aging. Participation's at pretty high levels. That's a good thing. Wages are still a bit above what would be, their wage increases rather, are still just a bit above where they would be over the very longer term to be consistent with 2% inflation, but they're very much coming down to what that sustainable level is, so we feel good about that. Vacancies per unemployed is back to what is still a very strong level. It's not as high as it was. That number reached 2 to 1, 2 vacancies for every unemployed person as measured. It's now around 1, but that's still a very good number, I would say. Quits have come back down to normal levels. I mean, I could go on and on. There are many, many employment indicators. What do they say? They say this is still a solid labor market. The question isn't the level. The question is that there has been change particularly over the last few months. And so what we say is as the risks, the upside risks to inflation have really come down, the downside risks to employment have increased. And because we have been patient and held our fire on cutting while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals.
And what do you expect to learn between now and November that will help inform the scale of the cut at the next meeting?
More data, the usual. Don't look for anything else. We'll see another labor report. We'll see another jobs report. I think we get a second jobs report on the day of the meeting, I think. On the Friday before the meeting. And inflation data. We'll get all this data. We'll be watching. It's always a question of look at the incoming data and ask what are the implications of that data for the evolving outlook and the balance of risks, and then go through our process and think what's the right thing to do. Is policy where we want it to be to foster the achievement of our goals over time? So that's what it is, and that's what we'll be doing.
Hi, Chair Powell. Neil Irwin with Axios. We've only been running a little above 100,000 jobs a month on payrolls the last 3 months. Do you view that level of job creation as worrying or alarming, or would you be content if we were to kind of stick at that level? And relatedly, one of the welcome trends of the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see risk that further labor market cooling will have to come through job losses?
So on the job creation, it depends on the inflows, right? So if you're having millions of people come into the labor force, and you're creating 100,000 jobs, you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. And the other thing is just the slower hiring rate, which is something we also watch carefully. So it does depend on what's happening on the supply side. And on the beverage curve question, yes. So we all felt on the committee, not all, but I think everyone on the committee felt that job openings were so elevated that they could fall a long way before you hit the part of the curve where job openings turned into higher unemployment, job loss. And yes, I mean, I think we are, it's hard to know that you can't know these things with great precision, but certainly it appears that we're very close to that point, if not at it, so that further declines in job openings will translate more directly into unemployment. But it's been a great ride down. I mean, we've seen a lot of tightness come out of the labor market in that form without it resulting in lower employment.
Thanks, Chair Powell. Edward Lawrence, Fox Business. So we've heard some speculation that you may be going with the federal funds rate to 3.5%, maybe under 4%. And there's basically an entire generation that has experienced zero or near zero federal funds rate. Now, some think we're heading in that direction again. What's the likelihood that cheap money is now the norm?
So this is a question, you mean after we get through all of this? Yeah. It's just a great question that we can only speculate about. Intuitively, many people anyway would say we're probably not going back to that era where there were trillions of dollars of sovereign bonds trading at negative rates, long-term bonds trading at negative rates. And it looked like the neutral rate might even be negative. So there was people were issuing debt at negative rates. It seems that's so far away now. My own sense is that we're not going back to that. But, honestly, we're going to find out. But it feels to me and that the neutral rate is probably significantly higher than it was back then. How high is it? I just don't think we know. We only know it by its works.
One more. How do you respond to the criticism that will likely come that a deeper rate cut now before the election has some political motivations?
Yeah. So this is my fourth presidential election at the Fed, and it's always the same. We're always going into this meeting in particular and asking what's the right thing to do for the people we serve, and we do that, and we make a decision as a group, and then we announce it, and that's always what it is. It's never about anything else. Nothing else is discussed, and I would also point out that the things that we do really affect economic conditions for the most part with a lag. So nonetheless, this is what we do. Our job is to support the economy on behalf of the American people. And if we get it right, this will benefit the American people significantly. So this really concentrates the mind. And, it's something we all take very, very seriously. We don't put up any other filters. I think if you start doing that, I don't know where you stop. And so we just don't do that.
Jolene. Thank you, Chair Powell. I'm Jolene Kent with CBS News. My first question is, very simply, what message are you trying to send American consumers, the American people, with this unusually large rate cut?
I would just say that, the U.S. economy is in a good place, and our decision today is designed to keep it there. More specifically, the economy is growing at a solid pace. Inflation is coming down closer to our 2% objective over time. And the labor market is still in solid shape. So our intention is really to maintain the strength that we currently see in the U.S. economy. And we'll do that by returning rates from their high level, which has really been, the purpose of which has been to get inflation under control. We're going to move those down over time to a more normal level over time.
Just a quick follow-up to that. Listening to you talk about inflation moving meaningfully down to 2%, is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
No, we're not. So inflation, what we say is we want inflation, the goal is to have inflation move down to 2% on a sustainable basis. And, we're not really, we're close, but we're not really at 2%. And I think we're going to want to see it be, around 2% and close to 2% for some time. But we're certainly not doing, we're not saying mission accomplished or anything like that. But I have to say, though, we're encouraged by the progress that we have made.
Hi, Katerina Saraiva with Bloomberg News. I just would love to know kind of how the committee is thinking about the persistence we've seen in housing inflation. Do you think you can return to 2% with housing inflation where it is? Yeah.
So housing inflation is the one piece that is kind of dragging a bit, if I can say. We know that market rents are doing what we would want them to do, which is to be moving up at relatively low levels. But they're not rolling over. The leases that are rolling over are not coming down as much, and OER is coming in high. So, it's been slower than we expected. I think we now understand that it's going to take some time for those lower market rents to get into this. But, the direction of travel is clear. And as long as market rents remain, relatively low inflation, over time that will show up. Just the time it's taking now, several years rather than just one or two cycles of annual lease renewals. So I think we understand that now, but I don't think the outcome is in doubt. Again, as long as market rents remain under control, the outcome is not in doubt. So I would say it's the rest of the portfolio, or of the elements that go into core PCE inflation have behaved pretty well. They all have some volatility. We will get down to 2% inflation, I believe, and I believe that ultimately we'll get what we need to get out of the housing services piece too.
Some of your colleagues have expressed concern that with starting to cut rates, you could reignite demand in housing and see prices go up even more. What's the likelihood of that, and how would you react to that?
The housing market, it's hard to game that out. The housing market is in part frozen because of lock-in with low rates. People don't want to sell their home, so because they have a very low mortgage, it'd be quite expensive to refinance. As rates come down, people will start to move more, and that's probably beginning to happen already. But remember, when that happens, you've got a seller, but you've also got a new buyer in many cases. So it's not obvious how much additional demand that would make. I mean, the real issue with housing is that we have had and are on track to continue to have not enough housing. And so it's going to be challenging. It's hard to zone lots that are in places where people want to live. It's all of the aspects of housing are more and more difficult. And, where are we going to get the supply? And this is not something that the Fed can really fix. But I think as we normalize rates, you'll see the housing market normalize. And I mean, ultimately, by getting inflation broadly down and getting those rates normalized and getting the housing cycle normalized, that's the best thing we can do for householders. And then the supply question will have to be dealt with by the market and also by government.
Victoria. Hi, Victoria Guida with Politico. Just following up on some of the labor market talk earlier, monetary policy operates with long and variable lags, and I'm wondering how much you see being able to keep the unemployment rate from raising too much comes from the fact that you're starting to act now, and that's going to give people more room to run versus just the labor market is strong. And then also, if I could, following up on Nick's question, do you see today's 50 basis point move as partially a response to the fact that you didn't cut in July, and that sort of gets you to the same place?
So you're right about lags, but I would just point to the overall economy. You have an economy that is growing at a solid pace. If you look at forecasters or talk to companies, they'll say that they think 2025 should be a good year too. So there's no sense that the U.S. economy is basically fine. If you talk to market participants, I mean, business people who are actually out there doing business. So I think our move is timely. I do, and as I said, you can see our 50 basis point move as a commitment to make sure that we don't fall behind. So you're really asking about your second question. You're asking about July, and I guess if you ask, if we'd gotten the July report before the meeting, would we have cut? We might well have. We didn't make that decision, but we might well have. I think that's not, that doesn't really answer the question that we ask ourselves, which is let's look, at this meeting, we're looking back to the July employment report, the August employment report, the two CPI reports, one of which came, of course, during blackout, and all of the other things that I mentioned. We're looking at all of those things, and we're asking ourselves, what's the policy stance we need to move to? We knew, it's clear that we clearly, literally everyone on the committee agreed that it's time to move. It's just how fast do you go, and what do you think about the path forward? So this decision we made today had broad support on the committee, and I've discussed the path ahead.
Thank you, Chair Powell. Elizabeth Schulze with ABC News. Mortgage rates have already been dropping in anticipation of this announcement. How much more should borrowers expect those rates to drop over the next year?
Very hard for me to say. That's from our standpoint. I can't really speak to mortgage rates. I will say, that'll depend on how the economy evolves. Our intention, though, is we think that our policy was appropriately restrictive. We think that it's time to begin the process of recalibrating it to a level that's more neutral rather than restrictive. We expect that process to take some time, as you can see in the projections that we released today. And if things work out according to that forecast, other rates in the economy will come down as well. However, the rate at which those things happen will really depend on how the economy performs. We can't look a year ahead and know what the economy is going to be doing.
What's your message to households who are frustrated that home prices have still stayed so high as rates have been high? What do you say to those households? Well,
what I can say to the public is that we had a burst of inflation. Many other countries around the world had a similar burst of inflation, and when that happens, part of the answer is that we raise interest rates in order to cool the economy off, in order to reduce inflationary pressures. It's not something that people experience as pleasant, but at the end, what you get is low inflation restored, price stability restored. And a good definition of price stability is that people in their daily decisions, they're not thinking about inflation anymore. That's where everyone wants to be, is back to what's inflation. We just keep it low, keep it stable. We're restoring that. So what we're going through now really, it restores, it will benefit people over a long period of time. Price stability benefits everybody over a long period of time just by virtue of the fact that they don't have to deal with inflation. So that's what's been going on, and I think we've made real progress. We don't tell people how to think about the economy, of course, and of course people are experiencing high prices as opposed to high inflation, and we understand that's painful.
Greg.
Hi, Chair Powell. Greg Robb from MarketWatch.com. I was wondering if you could go through, you said just at the beginning that coming into the blackout, there was like an open thought of 25 or 50. The Fed could move either 25 or 50. I would sort of argue that when we had those two last speeches by Governor Waller and New York Fed President John Williams, that they were sort of saying that maybe a gradual approach was going to win the day. I mean, I sort of want to ask a 7-part question about this, but I mean, could you talk, would you have cut rates by 50 basis points if the market had been pricing in like low odds of a 50-point move like they were last Wednesday? You know, after the CPI number came out, it was a really small probability of a 50-point cut. Does that play in your consideration at all? Just talk a little bit about that. Thank you.
We're always going to try to do what we think is the right thing for the economy at that time. That's what we'll do. And that's what we did today.
Thank you, Chair Powell. Simon Rabinovich with The Economist. You've mentioned how closely you're watching the labor market, but you also noted that payroll numbers have been a little bit less reliable lately because of the big downward revisions. Does that put your focus overwhelmingly on the unemployment rate? And given the SEP projection of 4.4 basically being the peak in the cycle, would going above that be the kind of thing that would trigger another 50 basis point cut?
So we will continue to look at that broad array of labor market data, including the payroll numbers. We're not discarding those. I mean, we'll certainly look at those, but we will mentally tend to adjust them based on the QCEW adjustment, which you referred to. There isn't a bright line. It will be, the unemployment rate's very important, of course, but there isn't a single statistic or a single bright line over which that might move that would dictate one thing or another. We'll look at each meeting, we'll look at all the data on inflation, economic activity, and the labor market, and we'll make decisions about is our policy stance where it needs to be to foster over the medium term our mandate goals. Yeah, so I can't say we have a bright line in mind.
Matt Egan.
Thanks, Chair Powell. Matt Egan from CNN. I know that you discussed earlier how the Fed does whatever the right thing is and nothing else factors in. But in general, can you talk about whether or not you believe a sitting U.S. president should have a say in Fed decisions on interest rates? Because that's something that former President Trump, who obviously appointed you, has previously suggested. And I know the Fed is designed to be independent, but why? Can you tell the public why you view that so importantly?
Sure. So countries that are democracies around the world, countries that are sort of like the United States, all have what are called independent central banks. And the reason is that people have found over time that insulating the central bank from direct control by political authorities avoids making monetary policy in a way that favors maybe people who are in office as opposed to people who are not in office. So that's the idea, is that, and I think the data are clear that countries that have independent central banks, they get lower inflation. And so we do our work to serve all Americans. We're not serving any politician, any political figure, any cause, any issue, nothing. It's just maximum employment and price stability on behalf of all Americans. And that's how the other central banks are set up too. It's a good institutional arrangement, which has been good for the public. And I hope and strongly believe that it will, continue.
Kyle Campbell for American Banker. Thanks for taking the questions, Chair Powell. A couple regulatory developments in the past week that I want to ask you about. First, last week, Vice Chair for Supervision, Michael Barr, outlined his views for the changes to the Basel III Endgame. I'm wondering if you are in alignment with him on what those changes should be, if those have support on the board in a broad way that you're looking for, and if you think the other agencies are also fully on board with that approach. And then yesterday, other banking regulators...
You know what? Hold the second question.
Okay, sure.
We'll give you the second question. So the answer to your question is that, yes, those changes were negotiated between the agencies with my support and with my involvement, with the idea that we were going to repropose the changes that Vice Chair Barr talked about, and then take comment on them. So yes, that is, that's happening with my support.
Is there a date for that?
That's not a final proposal, though. You understand? We're putting them out for comment. We're going to take comment and make appropriate changes. We don't have a calendar date for that, And as for the other agencies, the idea is that we're all moving together. We're not moving separately. So that I don't know exactly where that is, but the idea is that we will move as a group to put this again out for comment. And then, it'll come. The comments will come back 60 days later, and we'll dive into them, and we'll try to bring this to a conclusion sometime in the first half of next year.
And then yesterday there were merger reform finalizations from the other bank regulators. What does the Fed have to do to align itself on merger?
I would bounce that question to Vice Chair Barr. It's a good question, but I don't have that today. Thanks.
Jennifer for the last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said earlier that the decision today reflects with appropriate recalibration strength in the labor market that can be maintained in the context of moderate growth. Even though the policy statement says you view the risks to inflation and job growth as roughly balanced. Given what you've said, though, today, I'm curious, are you more worried about the job market and growth than inflation? Are they not roughly balanced?
No, I think, and we think they are now roughly balanced. So if you go back for a long time, the risks were on inflation. We had a historically tight labor market, historically tight. There was a severe labor shortage, so very hot labor market, and we had inflation way above target. So, that said to us, concentrate on inflation, and we did for a while, and we kept at that. The stance that we put in place 14 months ago was a stance that was focused on bringing down inflation. Part of bringing down inflation, though, is cooling off the economy and a little bit cooling off the labor market. You now have a cooler labor market in part because of our activities. So what that tells you is it's time to change our stance. So we did that. The sense of the change in the stance is that we're recalibrating our policy over time to a stance that will be more neutral. And today I think we made a good, strong start on that. I think it was the right decision, and I think it should send a signal that that we're committed to coming up with a good outcome here.
Is the economy more vulnerable to a shock now that could tip it into recession?
I don't think so. I don't. As I look, well, let me look at it this way. I don't see anything in the economy right now that suggests that the likelihood of a downturn is elevated. Okay, I don't see that. You see growth at a solid rate. You see inflation coming down, and you see a labor market that's still at very solid levels. So I don't really see that. No, thank you.
Okay, there we go. There is the end of the meeting.
Okay, that was Fed Chair Powell.
Fantastic.
Following the decision
All right. Now, what we'd like to do now is we want to carry on going through until the bell. We want to see how this trades because now we get the movement into the closing bell. I'm also going to give now the opportunity to members to call in. If you'd like to be on the show, if you'd like to call in, you can be in the show. So you can be right here in this space here. Guest number 1, just in there. So if you want to call in and have your say, if you want to talk about what you've just heard, whether you like the report today, whether you're happy, I mean, you should be happy, I think, but I'm sure everyone has their own thoughts and opinions on it. If you'd like to call in, you can. Let me give everyone the link of the show. You do need to be a member of our channel, so please become a member. We only have members call in for security reasons. You don't require any software, anything at all. Let me just give everybody the link. It's martynlucas.com/live. There you go. You can call in. This is what you see. Let me just give you the link 3 times in the chat. 1, 2, 3. So it pops out. Can you see that there? Look. And what you will see if you click on that is this page here. It's my website. And then you put in the password. In that little box there, I'll give you the password, and you can call in, phone in live to the show. This is what it looks like. So you click there. Yes, I accept my camera. You put your name in there. All right, just like that. All right, put your name in there, and you can join. I'll give everyone the password. Let me just mute myself, and I will answer. and I will answer, 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 and I will. That was supposed to be muted. Let's do that again. Right, try that again. I'll phone in myself. There you go. Mute. There you go. That's better. So what happens? What happens then is that was quite a moment, wasn't it? Then I can have you on the show, and this is what it looks like. I can put myself in my own spot. I'll give you the password in a second. Guest number one, and I put myself. Oh, Fight Channel's already calling in. Awesome stuff. Let me turn my camera around. Let me just show you how this works. Change my camera. So I'll change it to this one here. There you go. Change it to there. Done. And you will see in a second, I will have my camera. Just bear with me. I'm just changing my camera around. There you go. Camera. Done. Hang on. I'll do it again. I'll do reconnect. Hang on. Bear with me. I'm doing it all wrong. I want to make sure I get it right. Okay. Turn the camera around. There you go. And join and call in and mute myself. There you go. There's me calling me. So that can be you. All right. So I'll hang myself up. Let me hang myself up, but I will bring in our star guest today. You can all call in. Let me just close down that page. I don't need that anymore. We've got Fight Channel waiting to be in the spot. So Fight Channel, here you are. You are in guest number one. If you can just adjust your camera a little bit, I've got you right down there. If it doesn't matter, I can change it. I can change it. If you want to stay right where you are, I can fix you. All right, watch. I'll do this. Look, I'll press zoom. I'll pan you in, and I'll
do me in.
Yeah, I'll do you in, and I'll line you up. See, I can take care of it.
Look at the Pringle can back there.
You got a what? The Pringle can. Yeah, got to have a few Pringles in the show, ain't you? Right. Yeah. Okay. Fight Channel. What do you make of that today? What's your first thoughts?
Yeah, half a point is all right. You know, it depends on what he said. What he said is good to go. But yeah, we won't feel the effect till at least 6 months down the road. That'd be like till March next year.
Absolutely.
I don't know why everybody's complaining now.
No, I don't think a lot of people understand how this actually works. We've got still very high interest rates. Thank you, Leah, for my coffee. We've still got very high interest rates, still putting pressure on the market, still trying to bring inflation under 2%. This is just a step in the right direction. It's the first step in the right direction. So I was expecting 0.25, but I was right. We got a rate cut in the summer of 24. I said that 18 months ago. I did say 0.25. I was wrong there. It was 0.5%. But I think he gave a dovish tone. So I feel okay with that. And now it's just business as usual. As far as I'm concerned, my portfolio is still up. It's not selling off. There could be some dumping. I don't really care. What's more important, I think we mentioned it yesterday, and I think you agreed with me, what's important is what we get with the earnings in October. If earnings in October is good and we carry on with inflation not re-emerging its head, we'll continue dropping rates. I'm just excited now to see what happens with my Robinhood. Will they drop rates? What do you think? I mean, you're in Robinhood. Are they going to give me a gift today or go, no, we can, it costs us less to borrow the money, but we're going to make more profit from you? They could leave it like that. What do you reckon?
Well, they're charging 10 to 12% on margin compared to Robinhood. I mean, we're really doing good with that rate on margin. I mean, it's not no big deal if they lower on me because I'm only using like 6,000 worth of margin down from 8,000.
Yeah, exactly. It's a very good rate that we're getting right now anyway, isn't it? So at the end of the day, for some reason I can't change you on both. That's a bit weird. I don't know why I'm getting you on different Fight Channel. That's weird. Guest one solo. Hang on a minute. Let me come back to here. I've got no I've got no Stream Deck today. It's disconnected from my computer, so I'm literally flying manual today. I've got backup procedures for everything, and I've had to, do that. So I'm using all my scenes in Ecamm Live manually, so it's a bit more difficult. So yeah, you're right. We've got a very good rate anyway, but I hope they drop it, because that would be free money to me. 0.5% if they do that, but we shall see. Do you reckon they will or not?
I don't know how Robinhood thinks on that, their CEO,
They used to be 2% 3 years ago.
We can get back down there when rates go back down. I mean,
they might leave it a while. They might go a month.
Or they might wait till next month, see what the Fed does next month.
Yeah. Yeah, exactly. What's everybody else's? Does anybody have anybody else want to join the conversation? Call in today. You can have your opinions and views. Fight Channel, how's your portfolio done today? Because I'll share with you mine as we talk. You can see here my portfolio is still going up. It's very green, very nice indeed. If you look at Nvidia as well, which a lot of my viewers are, we are just about to approach neutral at the moment. 115. My portfolio is 114,000. We did touch another all-time high, 115,000 for a couple of moments. So all-time high, lower rates. I'm happy with that. But Fight Channel, how has it affected your portfolio today?
Up 2.5%.
Very nice, 2.5%. Very, very good indeed. So you're happy then with the result?
Yeah, I'm happy. I bought early this morning when everything was down.
Yeah.
I bought some more.
Yeah, cool.
Before everything happened.
Yeah. I'm not buying anything. I don't give financial advice, but I would encourage no one to chase this right now. We've had a bit of a rally today, a little bit, not much, but we've had a bit. Most of it was already priced in. So we've already had the rally over the last few weeks and months. So just let it settle down. There's a quick stay on the line. I've got a quick reaction here just for a moment. Just stay right where you are. I want to keep on the phone. But I've just got a quick reaction here from CNBC.
Today with that word, because it's the first word that Jeffrey mentioned.
Oh,
right?
I didn't hear that.
That's the thing that caught you most of all, just like Steve Leisman has. You stay with us, Steve. I want Jeffrey to answer this.
That's the word of the day for sure. I think I got the feeling that Jay Powell was getting quite confident about the inflation trend. Our inflation model, which uses shelter and the price of energy pretty heavily, suggests that the inflation rate on the headline CPI within about 5 months from now will go down below 2%. And it'll depend on what happens with the commodity complex in those ensuing months, but it could stay below 2% for quite some time. And the commodity complex is strongly supportive of that. The Bloomberg Commodity Index is below its 50, 100, 200-day moving average, all three of which are falling. And it is interesting that with the dollar having lost about 4% in value since the last Fed meeting, that the commodity complex is showing no signs of life at all, and the price of crude oil is hovering around $70 a barrel, with signs that it might break to the downside. So it could be interesting to see how low the inflation rate goes. I feel that one should not be worried about near-term inflation, but one should be worried about longer-term inflation, and that's what's got the long end of the bond markets a little bit concerned, because when the economy rolls over, we're starting from a deficit of nearly 5% of GDP, and it's going to go up a lot. And that means a lot of bonds. And will we have a change in the pattern? And I'm quite open to this idea, though not utterly convinced, that at some point in the recession, the fiscal and monetary responses will lead to the long end of the bond market perhaps going up in yield. And that could be sort of being signaled, even though it's for just the last couple of hours, by the action today.
Steve, lastly, to you, and you made this point, I thought it's interesting. Some of the criticism leading into today has been that the Fed's been too data dependent. Your suggestion with the move today of 50 basis points.
I'm going to come back to
is in fact a break from
your
that.
good self Fight Channel there. They're just talking about data dependent, because I've got strong views on that. I'm going to ask you as well. If you look at other economies like Europe, Canada, India, UK, we have a different way of measuring, and there's people suggesting that we are actually already at 2%. The Fed are behind the curve. They're using lagging indicators. They're very data dependent. And they need to change their way. I mean, do you agree with that or not? Do you think that we're not at 2%? There's more work to be done. Do you think the Fed should be so data dependent? And do you believe they're behind the curve? And if they are behind the curve, does it matter?
I don't think it really matters if they're behind the curve than other countries. Yeah, we do look backwards than other countries, but I don't know if they're going to change because Powell said he's been in there since 4 presidents. I mean, he's been around for 4 presidencies. That's about 20 years. I mean, really, it don't really matter on that. Well, I look at it, don't matter in my portfolio because I'm following my strategy I want to follow. I'm still making my dividends, reinvesting it, and in a day, I still got $7,600 to make up from August 5th. That I was down $29,000.
Yeah. So you still got some ways to go.
Yeah, I still got some ways to go.
Yeah.
So I ain't worried about it because my dividends roll in, reinvest.
I agree with you on the point that the U.S. economy is unlike any other economy around the world. They can afford, in my opinion, to be behind the curve. Other countries can't. The US, like he said, we took our time. Other countries lowered their rates. I think the UK have done it twice. They didn't do it today. They were expecting to drop rates today, but they didn't because the inflation's just a little bit sticky. But they'd not put it back up again. That would be the disaster. They've just left it as it is. But the Fed took their time. And I think the US economy is unique like that. It has that power and strength to do that. So, I mean, at the end of the day, markets are up. We've brought inflation down. I think the Fed have done a good job. Do you think they've done a good job? Are you happy what the Fed have done? Would you fire the Fed, as Donald Trump says he's going to fire the Fed when he gets in? Would you fire Jerome Powell?
We fire Donald Trump.
Well, we won't go into all of that right now. We'll keep it neutral on that score. But would you say that Jerome Powell's done a good job, or would you fire him?
No, he's doing a good job. He's doing what he needed to do and not worrying about politics out the side. I mean, politics don't need to be in this at all. The way I look at it, they're doing their job. They know their numbers. They're all smart, intelligent people that are in the Fed. I mean, it is what it is. I'm not worrying about that. I can't control what they do. I don't control what I can do with my account.
That's right. And you touched on the very important point there. Don't be focused what everybody else is doing. Focus on what you're doing. Don't do the FOMO. Don't FOMO in on the way up and don't FOMO on the way down. Have your own strategy. Stick to your own discipline. Understand what you're doing. Understand the business that you own. For me, it's a great day. I know we're not going to have a crash, and I know some people in the chat saying there's going to be a big sell-off in a minute. I don't see it. There might be some profit taking, but the economy is good. The businesses are good. There's no reason why we're going to get, my good old friend, Meet Kevin, 60% crash. It's not going to happen. I mean, if it did, it would be just like a 90% discount. It'd be like, Amazon's going free. Anybody want it? And, money would come in and swallow it up so quickly. If that happened, if we woke up one morning and we were 60% down, it would probably last for about 1 second and everybody would buy everything quickly. So, I'm ready. I'm going to have buy orders. I always do. I'm always looking for those deals where the stock market can just drop at 3 o'clock in the morning quickly. But I don't think I'm going to get my 10% discount because that's what I was looking for. I think I've got now what I've got. I bought enough. I up to my 50% margin, risk management. Now I just focus on working, turning up every day, doing my show, earn money, live as cheaply as I can and pay off as much margin as fast as I can and just do that basically and then reinvest it and use the dividends to bring down my margin every month. So I'm looking forward to that. I think the 2nd of October is my biggest ever payout on dividends. It's about 670, which I know is nothing compared to you, but there you go.
I had a video on my highest one not too long ago. It was Monday, I think.
How much was it?
5,500.
Yeah, way above me. But I'm happy with my 600 every
That's
quarter.
one day. That's one day.
Yeah. And it's gonna keep going up as well. So
You're
that's
gonna
all good.
It just snowball effect. It started off slow. Like May, I was at 818 before I changed my strategy to what I'm doing now.
Yeah.
Then it grew to 2,500. Then last month it was 4,500. Now this month could be 6K by the end of the month.
Yeah. Well, Fight Channel, thank you for calling in. We've only got 20 minutes left of the show. We're going to cover till the bell, just go through the bell a little bit and see where we end up. But as always, thank you very much for calling in. Appreciate it. There's Fight Channel live on the phone. Always great to have him call in. All right. So just before we go to the some more thoughts from CNBC and their contributors. If anybody else wants to call in, you can call in. You can be on the show. But just before we do, we've got 20 minutes before the bell rings. I want to invite everyone for a special event. I think we should celebrate this Friday on the Party Channel. I'm going to give you 2 hours of price predictions and plan for next week with no ads. I'm going to turn the ads off. No ad revenue for me. I'm doing the show for free. It's my gift to my members on a Friday on the Party Channel. 2 hours, and then we'll have some music afterwards and have a bit of a party. So I would like to invite everyone to join me for the party on Friday. Here is the link. It's pinned to the top. If you've not yet seen it, you can click like. You can click. I'm going to be there right now. Let me share with you. The event. So you might want to book yourself your ticket. There'll be 2 hours of price and prediction. This is the event here. It's in 2 days' time, 4:10 Central Time. It'll tell you your time zone here. If you go there now and click the bell, 2 people are already waiting. Click the like button, just the one at the moment. Go into the chat and say hello. I'm the first person, and you can put your request there, your questions, and we'll do 2 hours of price prediction for the upcoming week, where we see Nvidia and all your favorite stocks going, and then we'll have a party. Now, of course, if you do subscribe to my channel, it helps me raise money for charity. I'm trying to get to 10,000 subscribers, where I can do fundraisers for charity, and of course, I can do your charity events as well. So please do consider subscribing to me and joining me on Friday for the party. Right, now then, we've got 20 minutes to go. So let's get back to the reaction. And let me go through your comments. Now, we did have a busy day today. I was predicting that we'd get 40,000 viewers. Because I had 37 something for Nvidia. The difference is Nvidia was only being covered by a few other YouTubers, and I was ranking number 1 for it. So even though I am a smaller channel, we did very well for Nvidia. So I thought we could do better for this. But this is a global event, so it's even better. But then that means everyone covers it. Every news channel has been covering the Fed. So it's much, much harder to get big numbers. But I will tell you, I didn't get the 40,000, but I'm going to share with you what I did get. And this will go up, by the way, over the next few hours, of course. People will watch it. But I want to share with you what I did get and thank all of you for showing up today and supporting me. I got 7,858, which is absolutely fantastic. 40,000 would have been a record, but that would have been on the basis of, in ratio to subscribers to viewers, I would have beaten every channel there is if I'd got 40,000, if you look at the percentage of subscribers to viewers. So that was a big ask, but I was sort of planning for it. It never quite come off. But 7,800, it'll probably go to about 15,000, I would imagine, by maybe this time tomorrow. So halfway there by tomorrow, I would have said. That's pretty good. So thank you to all of you who have who joined in with me. We did it